host, Nick Toka, and on today's show, if the feds print more money, what's at stake for Bitcoin? Also, Bitcoin long-term holders are buying again. Can they push Bitcoin price higher? Of course they can. And Bitcoin whales absorb market pressure, but is it a parabolic rally and run really coming? We're going to go over our market watch and Bitcoin technical analysis, Bitcoin and the whole market pumping in the green today. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is April 12th, 2025, and you see the title, I survived the Trump recession that lasted 2 whole days, and ultimately that's what it was. As I've been saying all along, it was a negotiation tactic, and even this China extreme tariff of 140 whatever percent also is going to be some type of negotiation tactic. I've said it before, the smart countries came out and said, you know what, forget the tariffs, we'll go to 0% tariff even if the US is tariffing us. These are the smart negotiators. The dummies, like I'm seeing in Canada, this Carney fool, and in China, I don't know the guy's name, but instead of saying, hey, let's negotiate something, or we're going to go to 0 tariffs, why don't you also go to 0 tariffs? Instead, we're putting reciprocal tariffs. Whatever you're doing, we're doing twice as much. This, the states are learning pretty fast who are their friends and who are their foes. Who are the world leaders that have some basic sense of negotiation and some basic sense of intelligence, and they're seeing who are the idiots on this planet, and they're seeing it pretty fast, and they got their answer within days, really within hours of them threatening to put these tariffs. And ultimately there were tariffs on for 13 hours, and there was about a 2-day recession while all the lefties and liberals were freaking out, and now we're seeing a bit of a pump. We're definitely seeing quite a pump in the crypto market, and I presume on Monday we're going to see the traditional financial markets also pump it up. We'll see exactly what happens. It's always, never 100% predictable, but it's likely this is the route we're going to go. And Trump said right along, there's all from the beginning, there might be a little bit of pain, but ultimately we're going to have a great economy. So, I believe him. I don't see why it wouldn't be a great economy. Now, in terms of tariffs, there are some tariffs that should be placed specifically on China because they're ultimately stealing our intellectual property, right? There was a list of, they've basically stolen everything from Boeing, from Lockheed Martin, from Oracle, there was a huge list, like you'd be shocked. And they're basically using, American technology to build their fighter crafts, to build their code, to build everything. Instead, these huge companies in the States have been working hard for their intellectual property, and they basically just get it stolen, and then China uses it as their own. So in that respect, there should be definitely some tariffs, so they need to stop doing that, right? They have no respect for the environment as well. Precious minerals are another issue at stake here. And, if the states were trying to get some kind of precious mineral, or if they were trying to get it from another country, it would take, years to obtain these precious minerals. But China just digs them up without any regard to the environment, and they just dig them up in a few hours, and here's your precious minerals, right? So these things need to be addressed. And I think these tariffs are a good starting point and negotiation point, even with China. Now, with the rest of the world, I think fair deals are going to be struck, and I also think a fair deal is going to be struck with China. So as much as we've seen the markets react like insanely, right? Reacting strictly to the news, I think that when the news becomes good, specifically or especially when the first deal is struck, right? Once the first deal is struck, doesn't matter which country it's with, and Trump comes out and says, okay, we made a deal with whoever, Cambodia or Vietnam, or Vietnam's a big one. Taiwan's a big one. Even if it's a smaller nation, there's going to be a huge pump in the markets. Make no mistake. So we'll see where it goes from here. But, interesting times. The recession lasted all but 2 days. So stop freaking out, people. There's people protesting in the streets. It's embarrassing, to be honest. Let's get into our market watch and Bitcoin technical analysis. Bitcoin up 2% at $85,000 today. Ethereum up 4%, 1617. Solana up almost 10%, $132. Cardano up 5%, 65 cents. Doge up 5% to 16.5 cents. And XRP up 6.25% to $2.14.5. Checking out the crypto bubbles right now on the hourly, everything's kind of gone negative. But for the day, everything's way up. Jasmy, the Japanese Bitcoin, they call it, up 15%. Pi, as much as it was tanking for a long time, up 16%. Trump coin up 7%. HNT Helium up 27%. Pepe up 7%. Hex up 10%. Zooming out to the weekly, we've got XCN pumping large, up 112%. Fartcoin 77%. Jasmy up 60%. Hype up 38%. For the month, the smelly Fartcoin is the big winner, 250% gainer. XCN up 60% for the month. Current Bitcoin market cap is $1.7 trillion. Ethereum, $195 billion. XRP, $125 billion. Solana, $68 billion. Doge, $24.5 billion. Tron, $23 trillion. Cardano, $23 trillion. Total market cap is $2.66 trillion, with Bitcoin holding 63.5% of that. Ethereum 7.3%, XRP 4.7%. Crypto Fear and Greed Index shows us we are at a 45 in neutral today. Yesterday it was a 43 in neutral. Last week was a 34 in fear. There are approximately 1,096 days left until the next Bitcoin halving in 2028, with 157,854 blocks left to mine until then. Total assets by market cap, we've got gold coming very close to the 22 trillion mark. Now they're up 2.5% today. Current market cap 21 trillion 857 billion. Apple 3 trillion. Microsoft 2.9 trillion. Nvidia 2.7 trillion. Amazon 1.9 trillion. Google 1.9 trillion. Silver 1.8 trillion. Bitcoin just under 7 trillion. Saudi Aramco 1.675 trillion and Facebook 1.35 trillion. You can currently get 1,171 satoshis for one fiat US dollar. The current US national debt stands at 36,717 billion, equaling 107,335 per US citizen, or 323,049 per US taxpayer. The Doge clock shows us that Doge has saved the United States $311 billion to date, which equals to $2,768 per US taxpayer. If the Fed prints more money, what's at stake for Bitcoin? This is the question. It's not clear if the Fed will use its tools to add liquidity to the market. Agency officials continue to reinforce the idea that they are not in a hurry to take any action regarding the ongoing tariff action and chaos. Yet, the Fed is satisfied with the improving CPI inflation rate. In March, it reached 2.4%. And will not prioritize any other task before it fulfills its mission of bringing inflation to a 2% rate. For the first time in 5 years, prices saw a monthly drop of 0.1. So, consumer price index, so getting very close to where the Fed wants to see it before they start dropping rates. Right now we haven't seen inflation this low since 2021. Good old Biden. Hey, look at the inflation. Good God. Up to 7% for almost a year under their admin. And then it slowly came down. But, you know, when he exited office, it was still above 4%. So, you know, Trump's already doing a good job. So currently inflation at 2.4%, they say. The Fed will likely deflect from cutting interest rates to keep pushing inflation coming down, while Trump hopes that the Fed will cut rates to help the markets. Many experts agree that Trump wants a weaker dollar to boost exports and offset the trade deficit. Kashkari doesn't see the trade deficit as something extraordinary for the U.S. The disagreement on the interest rate led to a slow-burning conflict between Trump and the Fed Chair Jerome Powell. Reportedly, Trump seeks to terminate Powell through the Supreme Court before his term ends. Good for him. The U.S. president can't fire the Federal Reserve Chair without cause. Will the Fed add liquidity to the markets? The short answer is not yet, where we've basically talked about this before. They've put a pause on the tariffs currently, and we'll see what happens in the next 90 days. But ultimately, the Fed is still continuing with their schedule where they're planning to drop rates twice this year of 0.25%. Now, it was rumored that Powell was going to come out literally the day that these tariffs were going to take place, and they were going to, as an emergency measure, reduce interest rates by 0.5%. But the tariffs never actually took hold, so I guess that never happened. Fair enough. But inflation is still coming down with the higher rates. This is what they want. So we'll see what happens. In terms of Bitcoin long-term hodlers are buying again. And can they push the Bitcoin price higher? Well, it's already quite a bit higher today. After a dreadful start to the week, the price of Bitcoin appears to be recovering nicely with a strong rally beginning on the weekend. The latest on-chain data shows that a specific class of investors might be behind the relative stability experienced by the premier cryptocurrency amidst the recent macroeconomic chaos. Seasoned investors are loading their bags again. Yeah, that's what I'm saying. Buy the dip. Buy the dip. In April 11th post on X, crypto analyst Burak Kesmesi revealed that the Bitcoin long-term holders might be getting more active in the market over the past few weeks. This on-chain observation is based on changes in the long-term holder net position change 30-day sum, a metric that tracks the net change in the BTC supply held by long-term holders over a 30-day period. The metric basically tracks the aggregate behavior of an important investor cohort, providing an insight into the overall sentiment in the market. When this metric is positive, it implies that the long-term holders are in an accumulation phase. On the flip side, when the net position changes to negative, this means that the Bitcoin long-term holders are trimming their holdings and selling their BTC. According to Kesmeki, the long-term investors have been offloading their Bitcoin in the past 6 months as the long-term net position change has remained in the negative zone since the last week of October 24. The metric reached a negative peak of 827,000 and a half Bitcoin on December 5th, 2025, accompanied by a 32% in the Bitcoin price. So here we are now. Here was the peak that they're talking about. So it seems we are again we're in a buying phase. Here you see the buying phases in green, the selling in red. The chart above shows the long-term holder net position change shifted to the positive territory on April 6th and appears to be on the rise at the moment. This positive change signals fresh buying amongst the seasoned investors over the past few weeks. Kesmeki noted that the positive shift of the long-term holder net position has coincided with a recent 12% jump in the Bitcoin price. The Bitcoin price returned above 81,000 after United States President Donald Trump paused trade tariffs on imports from all countries except China. Nevertheless, the on-chain analyst urged investors to approach the market with caution as the current momentum is not sufficient. Hence, further conviction is needed from the long-term investors to sustain a major rally in the current market. So we do have buyers jumping in. So in terms of a short-term indication, this is definitely a good sign. And as we see, for the most part, this big area, the only other area we see in their chart, this goes back to 2022. The only other area we see that's similar, there was a huge jump in buying right after that. So potentially we could be in this area of massive buying as well. And this was also at a time when the price was hitting its all-time high. We're talking about peaking here just after, right in November, and then it was the sell-off after Trump won the election. Then again, a tiny peak of green just in January, it seems, January, February. But this is definitely a good sign. We'll see how this rolls over the next little while. Now, Bitcoin whales, on the other hand, absorbing market pressure, but is a parabolic run really coming? I feel like it is. And here we've got the whale compared to the fiat crap. Less than 2 weeks after Trump's Liberation Day announcement, the U.S. market remains highly volatile. The bond market has crashed, and the Treasury yields posted their biggest weekly jump since 2001. Overall, it appears Trump's trade war has backfired, hence the 90-day pause that followed. With the broader market struggling, Bitcoin has steadily reclaimed its key resistance zone. This isn't a coincidence. Big money has driven the cycle, with large wallets, 1,000 to 10,000 Bitcoin, acquiring 100,000 Bitcoin since March. Though analysts are bullish, speculating on a parabolic run and calling Bitcoin an emerging safe haven might be premature. What happens when the large holders sitting on unrealized profits decide to exit in a volatile market? Are we nearing a market top or a potential sell-off? Bitcoin defies market expectations. Let's break down the current state of the U.S. economy to understand the impact on Bitcoin. Normally, U.S. bonds and treasury yields, which represent the U.S. government's borrowing costs, don't move in lockstep. In simple terms, when the bond market declines, yields spike. Economists point to this dynamic as the catalyst behind Trump's adjustment of his tariff policies. On April 9th, 10-year U.S. Treasury yield surged by approximately 10 BPS, breaching the 4.5% mark, its highest level since mid-February. Here we have it. What's going on is, people are losing their they're losing their thought, their courage, their good expectations on bonds. So the stock market's scaring them, the bonds are scaring them, and they're looking for somewhere else to put their money. So we know, the biddy is a good spot. There's no better. And of course, gold, silver, even real estate right now is sketchy. What's going to happen with real estate? Looking ahead to 2025, a large portion of U.S. debt will mature. We've talked about this quite a bit, triggering the need for refinancing. In fact, reports indicate that between 7 to 9.2 trillion, I'm pretty sure it's the 9.2 trillion, will require financing throughout the year. The recent bond market crash, allegedly triggered by foreign sell-offs, has driven yields higher, elevating the government's cost of borrowing. As a result, the likelihood of near-term rate cuts has significantly diminished. This has also undermined the U.S. dollar image as a safe haven. Against this backdrop, the White House announced a 90-day tariff pause, and yet the macro uncertainty is far from resolved. The U.S.-China trade conflict continues to escalate. In fact, in this face of this economic turbulence, Bitcoin has defied broader market sell-offs. Following a week of heavy selling pressure that briefly dragged prices to below 75 grand, Bitcoin staged a strong reversal. At press time, it had rallied 11% to reclaim 83.5, and as we saw, it's over 85 grand right now. Big money steps in. CryptoQuant data revealed that whales have been pivotal in absorbing recent market pressure. Since March, wallets holding between 1,000 and 10,000 Bitcoin have acquired a significant 100,000 Bitcoins. Further analysis found that long-term holders now command 13.6 million BTCs, reflecting a 420,000 Bitcoin hike in their holdings over the same period. So long-term holders hold almost 14 million BTCs, which pretty much is almost all the Bitcoin, guys, because there's 21 million Bitcoin. Out of that, it's believed that 4 or 5 million Bitcoin have been lost. And we also know that not all these Bitcoins have been mined yet. there are approximately, or let's not approximate, let me give you the exact number here. There are 19,850,000 Bitcoin in circulation. So out of that, 5 million have been lost per se. So that brings us to 14.8 million Bitcoin. And according to this, 13.6 million Bitcoins are owned by long-term holders. So that only leaves 1.2 million Bitcoin. So if you look at, and I don't know if they're including BlackRock and MicroStrategy, because if they are, those two combined own 1 million Bitcoin. So then that would mean that if in fact 5 million Bitcoin have been lost, that would mean that there's only 200,000 Bitcoin available. Very, very interesting. Right now, the net unrealized profit loss for the long-term holders is 0.68. This indicated that on average, these holders may be sitting on 68% unrealized profits. That sounds about right. Zoom in on this chart. BTC price is the black line, and long-term holders with unrealized gains is really the orange. So they're sitting at 68% unrealized gains, and they're not willing to sell because they're basically hodling, right? HODL be thy name. That's the name of the game in Bitcoin, right? From a mathematical standpoint, given Bitcoin's press time market price of 83,500, the implied average acquisition price for long-term holders would be approximately $49,500. Notably, the NUPL has not yet entered the euphoria phase, an indicator often seen at market tops. For reference, during Bitcoin's rally to 109,000 in January, the NUPL hit 0.76, marking a significant point of market exuberance. However, the broader macroeconomic environment remains a key variable. Just like Ethereum saw massive capitalization from long-term holders after the driven pump, Bitcoin could face similar pressure. While the 90-day tariff pause provides some temporary relief, it will eventually end. This could reignite volatility. Additionally, the ongoing U.S.-China trade war continues to weigh heavy on the market, with investors watching closely. Because of this, it's still too early to call Bitcoin's current resilience a sign of parabolic run. Caution is still the best approach. Yeah, but interesting. Not too much Bitcoin left to go around, folks. So it still seems to be a decent price for Bitcoin at this 85,000. All-time high, of course, being almost 110,000. And on top of that, we still haven't really seen the market top as far as I'm concerned, and as far as the most big analysts are concerned, we haven't seen the market top yet, and they're still predicting over 200,000 as the market top. So we're not even close. We're looking at a 2.5x still from this point. Historically, the market top for the cycle top has been approximately in October or November. So still, 6 months to go here to really see how this closes out the cycle. Additionally, we might be pushing this cycle back a little bit. It almost feels like in every halving, the date of the market peak has been pushed back a little bit. And with this whole administration change and tariffs, so many changes. You know what's interesting about this whole thing? I wonder if Satoshi, the creator of Bitcoin, made it on purpose that the Bitcoin halving takes place the same year as the U.S. election? Or was this just a funny coincidence? Kind of interesting. What I do know for sure is there's money everywhere, folks. There's $900 trillion in assets around the world, so money is abundant. Money is everywhere. Really, it's time that's scarce. So spend your time wisely. Spend less money than you earn. This is basic financial literacy. And if you start making more money, start saving more money. Don't start spending more money. If you start investing when you're young, when you're in your late teens or early 20s, ideally you can retire when you're 40 or 45. This is a good approach. Start investing young. If you've got a great idea, also start this idea today. Even if you're not ready, it's a known thing. Nothing's ever going to happen if you don't start. Hopefully you found this stream enjoyable. Please take a moment to share, like, comment, and subscribe. These are all free ways to show your love for the show, and I will continue bringing you the latest news in the crypto world and finance, and we will see you on the next stream, folks. Thanks so much for joining.